if I'm selling one iPhone and I'm going to sell it for $500, everybody knowing that it's $1,000 phone, there's gonna be thousands and thousands of buyers there. But as I continue to raise that price, there's gonna be less demand for my one supply. Once I have one supply, which is one phone, and I have zero buyers, which is no demand, price will go down. So now there is
Right.
more supply for demand, and that's how the
Yeah.
financial markets
Yeah.
work. It's always great to be back every single week, helping our listeners make better investing decisions. And our sponsor, Online Trading Academy, has been teaching people just like you for over 24 years how to use the market for income potential. We're located out here right in Bloomington, next to the Mall of America. Now that could be during your working years or during retirement. We talk about the financial markets. That's both aspects of that. Now, Al, we talk a lot about investing on this show. We talk
Hmm.
about investing in the financial markets. We do shoot a lot of bull, but we do also talk stock. So let's do that today.
That's what we're here for.
Let's talk about the stock market. We had some other great moves in the markets. We had a couple big movements this week. Tuesday had a big drop. Wednesday came roaring back, and we're seeing a lot of volatility in these markets, which is movement and movement that's a little bit quicker than normal, which is a very, very great thing. Now, you help a lot of people here at Online Trading Academy help help them make better investing decisions, whether they're in their working years building that wealth,
Hmm.
or during the retirement years protecting and continuing to potentially grow that wealth. What are you doing right now with the crazy volatility, the great moves, the Fed talking, China talking about and hurting the cryptocurrency market? What's going on, and how do you help people?
Lots of opinions out there, Josh. Every day we see opinions that support the fact that the market's going to continue going up. We see opinions supporting the fact that the market's going to go down. So there are these opinions, but then there are the facts. And the facts are what our education is built around. And the facts are that price doesn't lie. And what happens to price, in other words, where does it go after you get in? That's the most important consideration when you're looking at making a trade or an investment.
You're right. And I kind of kicked the show off. We talk a lot about, talk a lot of bull. Is that kind of the same thing of that phrase as everybody has an opinion, just like something else or something or other?
We're where we won't go with that, but yeah, you're on the right track there. Yeah, but opinions are opinions, and opinions don't move the market. The market doesn't care what my opinion is or your opinion, but there are facts, and you really want to concentrate on what is factually moving the market, what factually impacts what the market is doing price wise. And you can take the same trade, by the way. Let's just say that two people want to buy XYZ stock. And for one person, it ends up being a good trade, and one person, it ends up being a bad trade. How can that happen? Well, if one person got into that trade at $2 and now it's trading at $50, that's a good trade. If the second person bought it at $100 and now it's trading at $50, that's not a good trade. That's a bad trade.
That's a great point. But how do you get people on that side of the good trade potential?
Well, yeah, the difference there between those two trades was the entry price. So,
Okay.
and that is the most important thing. One person bought that stock when it was on sale at the bottom, and then one bought it when it was overvalued at the market top or the market peak. So the important thing then would be to try to identify where the market bottoms and the market peaks are. So, and what if you could do that? What if you could actually create the top and create the bottom? If you could do that, couldn't you do really well in these markets?
Well, I think somebody does create that. It's not you and I, though. It's not our listeners.
Good. That's a good point. Yeah. Can anyone do that? Absolutely. And think about it. If something or someone is causing the price of something to stop going up and start going lower, and something or someone is causing the price to stop going lower and start going higher, is that you as a retail trader? No, it's not you. It's not me. It's not Josh. It has to be someone with a huge amount of money, millions or billions of dollars to have such a big impact on price movement. So, who is that money? Who is that person or that something? It's the people we talk about every week: the smart money, the Wall Street pros, the big institutions, and they do have millions or billions to invest. So, would it not make sense just to trade with the people that are creating the top and the bottom, which are these individuals? And then, what if there was an investment trading strategy that showed you how to follow them, and then also kept things simple because you use that same strategy for all assets and for all trading styles. It's the core strategy that Online Trading Academy has developed. And in these classes, I know you're going to be talking about, we go into detail on that. We show you how that core strategy functions, how it actually identifies where those people with the millions and billions of dollars are buying and selling, because that's what you want to do. You want to follow them. You want to just don't do what people are saying you should do. Don't do what's based on someone's opinion. Do what's based on factually what is happening, based on what the people that move the price of something are doing.
Yeah, and that's really how the markets work. It's just supply and demand.
Exactly.
When there's more demand for, you were mentioning XYZ stock, price will go up. Just like an auction. If I'm selling one iPhone and I'm going to sell it for $500, everybody knowing that it's $1,000 phone, there's gonna be thousands and thousands of buyers there. But as I continue to raise that price, there's gonna be less demand for my one supply. Once I have one supply, which is one phone, and I have zero buyers, which is no demand, price will go down. So now there's more supply for demand. And that's how the financial markets work.
You can't, that's something you really can't argue in any financial issue.
It's the law of supply and demand.
Right. But in trading and investing, just look at supply as being sellers and demand being buyers. When there's more buyers of something, price will go up. When there's more sellers, price will go down. The key is identifying where the buyers and sellers are. That's what core strategy will help you do.
Yeah, I mean, I'm glad you kind of gave that analogy of that, the good trade or investment and the bad trade or investment. It's all about finding the right price. So if you're listening right now and you're saying, oh, how do I find the right price? You need to understand who's moving the price. We now know it's the institutions, the banks, the Buffetts of the world. So you need a strategy like a core strategy that's designed to find those entry points at a low risk, high reward, high probability entry points, which is at or typically near a turn in price.